Retail investors are looking to adjust their portfolios as rates come down, with 76% planning to increase or maintain their investment portfolio contributions. That's according to data from investing platform eToro. For more on this, I'm joined by Bret Kenwell, who is the eToro investment analyst. Great to have you here on set with us.
Thanks for having me.
Absolutely. Let's talk about this a little bit more here. What are retail investors prioritizing from what you can see as they adjust their portfolios?
Yeah, so we really started to see this change actually come after the election, and retail investors are starting to prioritize. They want to kind of calculate their portfolios and increase their allocations into crypto and into equities are two big risk-on areas they're focused on. But cash was sort of the other focus, which was sort of interesting. It clashes with the first two options. And when we kind of dig through the data, we think it's more of an opportunistic move to cash, with investors looking to redeploy that later in the year. On some sort of pullbacks in the market and in crypto.
According to the survey, there's so much of this Gen Z allocation that's focused on cash, more than any other generation. Why do you think that is? Yeah,
that one was really interesting. I think that one kind of threw us for a curveball a bit because, you know, our younger investors tend to be more risk on. They tend to embrace that risk. They want to see the big gains, and they're willing to sit through the volatility to get there. So to see this move to bonds and to see this move to cash really kind of struck us as an interesting move. But when you kind of consider who a Gen Z investor is, or the top age of that generation is about 27. So they have a lot of large life purchases, you know, kind of coming up, whether it's buying a house or starting a family, getting married. So it really depends on who that investor is and if that decision makes sense for them. Otherwise, you know, we kind of lump that in as maybe, again, taking advantage of some of the strong gains we've seen in stocks and crypto over the last 2 years.
Yeah, average first-time home buyer right now, 38 years old. So I wish Gen Z well in that effort to get that house a decade prior to that. You know, but all things aside here, and me wishing them well, Gen Z also allocating more to high-yield bonds than other generations, as you were mentioning. Do you think this is a smart move?
Yeah, the move into high-yield bonds, particularly for Gen Z, is quite interesting. Again, it could be a number of factors. They're not as experienced as a millennial or a Gen X or, of course, a baby boomer investor. And so perhaps that's them dipping their toe into the water a bit, into the bond pond, see if they can take advantage of some of those yields. Because even though the Fed has been cutting rates, we've seen Treasury yields moving higher. We've seen some of those returns kind of coming back, even though the asset has performed pretty poorly over the last couple months. So it could be them moving into bonds to try to take advantage of that pullback.
And so, according to the survey, 59% of retail investors, they expect AI stocks to rise. Only 22% actually hold AI-related names, though. Why is that the reason, perhaps, for the range in between?
Yeah, again, when you dig through all the numbers from the survey, it kind of feels like an opportunistic move from retail investors as a whole. Mm-hmm. So like you mentioned, about 60% of respondents said that they believe AI stocks will continue higher in 2025, yet less than a quarter of respondents actually own AI stocks, which was down pretty notably from Q3, where 35% said that they had allocation to AI. So again, this feels like a moment where, because when we did this survey, it was late November and early December. That's when you had your Nvidias and your Palantirs hitting record highs. Stocks were doing pretty well. An opportunistic move into cash, taking some profits off the table. My interpretation is likely looking to buy the dip in 2025.
Okay, and so the dip in AI, are there any other dips that you think that, and see in this data, especially as consumers, according to the U.S. Consumer Confidence print from the Conference Board, the most recent one said consumers became a little bit less bullish about the stock market in this most recent reading here. It seems like there is that dip buying mentality. They're just waiting for certain pockets of those dips.
Sure, and I think, you know, for a lot of investors, they're keeping in mind what happened a couple years ago, where we had this very strong, finish to the year, finish to 2021, and then a very difficult 2022. So maybe investors trying to get ahead of that a little bit, taking profits when they can versus selling when they have to. But when we zoomed in on AI, they were bullish, but when we zoomed out, they were bullish too. That applies to the Magnificent Seven and mega cap tech. It also applies to stocks as a whole. We asked point blank to retail investors, do you expect the bull market to continue in 2025? And a majority, I believe it was about 61%, said yes, they do. So they remain optimistic for the coming year.
Really fascinating insights. Bret, thanks so much for taking the time here with us today.
Yeah, thanks for having me.
Appreciate it.